think people were expecting them, to miss.
I think they're going through a tough time right now with the Cybertruck ramp.
No doubt they had a slow quarter in Q3, but people expected that.
You look, he's got a lot of things going on, legal battles, custody battles for his kids now, but it doesn't justify acting like Trump on Twitter, stonewalling the SEC or the European Union, and quite frankly, turning into a little baby on the earnings call.
I mean, if you looked up disaster in the dictionary, there'd be a video of last night's conference call.
Yeah, look, the conference call was lousy. The earnings were lousy because they missed on the most important metric, which is auto gross margin.
And if I look at the stock and I look at now the three reactions the day after it's reported, it's Q1, it's Q2, and it's Q3, it sold off basically 10% each time.
Mama said there'd be days like this. Mama said. But let's get to it. Well, Tesla's Q3 earnings are over, and yeah, money managers are panicking left and right. At the moment, Tesla is down in the pre-market at $219.35. That's a huge drop-off from where we were a few days ago at about $250 per share. Now, I knew that this was going to happen. I'm not clairvoyant, I just knew that the numbers weren't going to meet Wall Street expectations. They were really, really high leading up to the Q3 earnings call. But I didn't sell my stock. No, that would be foolhardy. What I did do, however, was take advantage of an opportunity. Maybe I could have wagered a little bit more on my hunch. I'm satisfied with putting a put at $255 and receiving about 300% on the return. So while Tesla continued to tumble, I made money on that downturn, and I chose to use some of those proceeds to buy more shares. I am still extremely bullish on the stock, but there is a method to my madness. My hope is to never have to touch my Tesla shares, but to leverage proceeds from the options market into acquiring more shares. With that being said, I never really expect Tesla to drop below 215 unless there's some other tragic event that might occur. But at these levels, probably not going to be placing any puts anytime soon. I'll be buying shares because unlike some analysts, my bear case has not changed. Q3 hasn't disrupted my bear case by any means whatsoever. Now Q4, we don't have the record quarter that would lead us to 1.8 million vehicles per year. My projections for 2024 may change. But as it stands right now, I still have a fair value estimate of $364 in the bear case. Elon didn't say anything on the call that I didn't already know.
It was a miss on the numbers and a miss on sentiment. I would say it was a trifecta of doom from Tesla. Tell me the other side of the trade.
Yeah, certainly I think people were expecting them, to miss. They had some production cuts for upgrades. But I think what the investor base is really missing is this is actually a part of a giant pivot towards become a supplier to other OEMs and eventually licensing FSD. Initially they said they were going to have all these volumes, selling 20 million cars, these sorts of things. I think we're noticing the company changing the narrative towards maybe not making as many cars, but now pivoting towards selling charging infrastructure, power electronics, batteries, and then, yes, FSD and autonomy.
Are we? They just retooled the factory. The dip was forecasted, so now you think it's a part of their major strategy to pivot from 20 million vehicles? No, I'm not saying that they can't do some of these other things. They probably more than likely will, but it doesn't necessarily have to be one or the other.
What would that do to valuation? I'm looking back here on a 5-year chart. $412 is where it is. Why not say to the market, actually, I'm going to carve out this auto production unit and I'm going to have a I am a tech manufacturing supply chain company. With that hives off what is a car company and gives you a tech company. Does that re-engineer the value quicker to $305? Would his ego let him do that? That's the question that goes in the back of my mind.
Yeah.
Well, you kind of need the cars as a proof of concept, right? To see FSD, to see the technology firsthand. So it's really a proof of concept today. But if you look at my 305 price target, only 10% of that is cars, actually. I have... 70% of it is robotaxi and 20% of it is just FSD itself. So this is a completely different future for this company. You need the car as the proof of concept. As far as separating these businesses out, maybe that happens in the future. But really what they need to do is show that take rate of FSD, how profitable it could be, And then in the future, the robo-taxi promise. That's ultimately what he talked a lot about in the call last night. And I think that's really ultimately going to solve this whole jigsaw puzzle.
I'm telling you, the market isn't accounting for all the various things that Tesla could become profitable in. Now, Tom is correct. Tesla as a supplier could be quite lucrative, but that is a side effect of what their true goals are. And that is the transitioning of the world to a sustainable energy economy. Everything else is byproduct.
So, Hatem, I'll start with you. And, I'd like to just first say, is this company a buy? Would you say buy the stock? It's at 220 today. Before we get into the nitty gritty and all the details, I just want people to know right away what your thoughts are. Would you buy the stock today at 220, Hatem?
If you believe in the long-term future of Tesla, absolutely. I think they're going through a tough time right now with the Cybertruck ramp. But ultimately, what Tesla is trying to do is so revolutionary, it's so different from any other car company. And I think they will succeed. So you want to take opportunities like this when the stock is down and really, if you don't have a position, maybe take one.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother right. Couldn't have put it better myself. When the stock is down, consider that a buying opportunity for the future. You gotta have a long-term outlook when you're talking about Tesla because the market doesn't understand what they're doing until it's too late.
Yeah. So what did you think about the report, Hatem? I mean, what jumped out at you? You said it's a tough time and it was somewhat baked in. Why?
Honestly, it was depressing. I think Elon sounded tired. He sounded deflated. There's a lot going on with the Cybertruck ramp, it sounds like. They're going through a tough time. I think he, maybe distracted a little bit about what's going on Twitter. And obviously geopolitically, there's a lot of things going on. So I think he's worried about interest rates and the economy is slowing down. So all that came out in the conference call. Elon is someone who wears his heart on his sleeve. He's not scripted. He goes in, however he feels. You can hear it in the conference call, and that was yesterday.
I'm not betting against Tesla. The Cybertruck will be the most advanced battery electric vehicle that consumers can purchase. And for the price point, we're probably looking at sub $65,000. Yeah, this thing is going to have so much new technology in it, it's going to be a little bit difficult to ramp up to significant volumes. But they will do it.
Right. Okay. What did you think about this, Steve Wesley? First, tell me, do you think that Tesla's a buy at 220? And tell me what you thought about the report.
Look, long term, I think Tesla's absolutely a buy. No doubt they had a slow quarter in Q3, but people expected that. Tesla had been very forthcoming. They were going to slow down a lot of their facilities as they retooled to make them more efficient and also to give the Tesla Model 3 a much needed facelift with the new Highland coming out. But at the end of the day, I think they're going to come roaring back in Q4. What people don't realize is Tesla's taken the cost down 25% this year. That brings the Model 3 down to about $30,000 after rebate, $32,000 from the Model Y. I think they're going to come roaring back in Q4 with awfully big numbers. But long term, the reality is Tesla owns 50% of the U.S. market. They're selling more EVs than everybody else combined, and they're clearly number one globally. Tesla Model Y, largest selling car in the world, electric or gas. So I think they're pretty well positioned. The big question is, can they stay ahead of BYD? There's a clear number two challenger, and I think BYD is going to give them a run for the money. But long term, the whole world's going electric, and Tesla's the king of the hill.
Yeah, and there's an article here that even Tesla needs to tone down its EV ambitions. Elon Musk saying we need to make our products more affordable so people can buy them. Steve, is this a good thing here? Because you do expect record numbers for this company going forward in the fourth quarter, right?
Yeah, absolutely. Look, there's two things going on. Elon's absolutely right. He's playing the long game, and he's saying if we're going to be the dominant leader over time, and again, the Chinese are coming, lower cost models, he's got to keep an eye on cost, and I think they're doing a better job of that than anybody else. Again, no one has the advanced robotization of the assembly line that Tesla does. They're the clear leader in OTA software. So in terms of net profitability, they are number one in the world right after Porsche. So if they can keep that up, they're going to be in awfully good shape. Plus, they also have the Tesla Energy division, which is growing like crazy. That may turn out to be their secret weapon.
Everybody's sleeping on the energy division. Their solar deployment, a little bit low, primarily because California switched from net metering. Tad bit disappointing, but Powerwalls, the mega packs, expect the demand for these products to go through the roof over the next few years. They're not designed to replace the grid, not yet, but the supplementation of the grid, stabilization, utilities, homeowners, they're realizing that there is some value in that right there.
I know this was not the earnings call that people were expecting. I mean, we're used to the kind of Musk that we see on X, who sort of dips into everything, but this was an earnings call. What were your big takeaways from this?
Oh my gosh, this was terrible. I feel bad for him.
You feel bad for one of the richest men in the world, one of the greatest innovators of our time. You feel bad.
Look, he's got a lot of things going on, legal battles, custody battles for his kids now, but it doesn't justify acting like Trump on Twitter, stonewalling the SEC or the European Union, and quite frankly, turning into a little baby on the earnings call.
Damn, where'd all this hostility come from? You take a lesson from Adam Ruck and you need to chill, bruh.
I mean, he was almost in tears. It showed a complete lack of leadership. Tesla's a leadership-less company right now, and it's terrible. That's why their CFO just left, I believe, as well.
I don't know. Tesla, you're obviously doing it wrong. Executives come and they go. Nobody's meant to be there forever. But I love it when my come on and whine like a baby. This is the very definition of pot calling kettle black.
And this is a slap in the face to everyone. It's not just the shareholders, but it's a slap in the face to the other managers who are still there and the over 100,000 employees at Tesla. For a leader to cry about the economy rather than funneling that and coming up with a plan is pathetic.
Elon, you're doing it wrong. And I thought the plan was to lower prices to make the cars more affordable so more people can have the cars, so that when FSD is no longer a beta, you realize all that deferred revenue plus the adoption rate goes through the roof and you have instant margins with a flip of a switch. That's not the plan?
He's slow-walking his plans to build the Mexico Gigafactory because he's worried about the economy. He's afraid, but he should channel that. And he should instead negotiate with the Mexican government, provide a clear formula. Rates go up, prices come down. It's not that hard. But Tesla still has industry-leading margins, over 16.3%, go into gross profit. Out of every $100 they make, $16.30 go into gross profit, beating every other American EV manufacturer and even a legacy auto manufacturer. They have so much going for them, but they should provide a clear formula. They should advertise to higher income areas, and they should provide a clear path for margin expectations. We got none of that. We got a leaderless Elon Musk who was afraid to be on an earnings call, who sounded beat down and like somebody who's basically leading Tesla into a directionless path forward. It's disgusting.
Well,
Oh my God. Now, I for one didn't get baby vibes from Elon on the call, but apparently Kevin here obviously knows a baby when he sees it, because this right here looks like a motherfucking baby. Now, I get it. This guy probably manages money for other people. He's been pounding the table that Tesla is a giant. You need to own this stock. Well, it just dropped 12%, Kevin. Are you a dumb ass? And then he has to react this way because the people he manages money for thinks he's a dumbass.
Well, Kevin, regardless of, how you interpret Elon Musk's comments, we are seeing that reverberate throughout the EV sector. You look at where shares are among Tesla's competitors, all down, partly because of what we heard from Elon Musk saying that higher rates are sapping demand. Is that the whole story here?
Well, yeah. I mean, look, it's obvious that when rates go up, car prices become less affordable. It's the same thing for home prices. There are less buyers. Now, when it comes to homes, there are also less sellers, so you have a little less fluctuation. But in vehicles, everybody's producing more. So of course this is normal. But Tesla should be playing its strengths here. Tesla's strengths are out of everyone who's in this hard economy. Tesla is still generating massive profit per vehicle, massive free cash flow, the only pure play EV in America to actually be generating this cash flow. There's so much potential. They're so close on autonomy. They're so close on a revolutionary new vehicle, the Cybertruck, which is an exoskeleton rather than an internal skeleton for a vehicle. These are great products, and the people at Tesla should be cheered for this. But we need to know the lights at the end of the tunnel rather than hearing a complaining CEO who's not actually providing that path. This makes people nervous and scared. It makes people want to quit
Kevin,
Tesla
if we
and
look
not
at
be part of that.
Not me. Maybe your people. This situation makes me want to buy more Teslas. In fact, I already did and will continue to do so as long as I have the available funds. I wholeheartedly agree. And if you choose to sell your Tesla stock off this, I'm going to go ahead and say it. Maybe investing might not be for you. It's not Elon's job to send you signposts or the light at the end of the tunnel. The motherfucker's got more important things on his mind, Kevin, than to handhold you into the future.
Is that warranted when you consider the higher rates may be sapping demand right now? But I guess the question to you is, does that long-term play for EV demand, does that remain intact still?
Oh, absolutely. 100%. Look, like long-term, 5-10 years down the road, everybody's going to want an electric vehicle. The range won't be an issue. There'll be charging stations everywhere. You'll be able to charge faster. Then you can fill up your tank of gas. These cars are much safer. They're much less likely to catch fire. They're much less likely to roll over. You don't have fuel in the back of your car in the gas tank. These vehicles are phenomenal. The acceleration's better. The handling's better. Everything about electric vehicles is better. Problem is, you have, Elon acting like Trump on Twitter, and he's really frankly upsetting a lot of people. There are a lot of, especially women, which is another demographic Elon should be playing towards, upset and who would never touch a Tesla vehicle.
What the are we talking about? How can you go from sane to demented in the same breath? Please, somebody tell me, what the is he talking about?
But long term, EVs will be dominant. ICE cars will go away. That is very clear. That long-term trajectory stays intact.
And Kevin, I want to ask you about delivery numbers, because one of the things that we're expecting potentially is for more price cuts because Tesla's feeling pressure to meet those delivery numbers. But I want to talk about the game changer that's supposed to be the Cybertruck. I want to play you this soundbite from the earnings call from Musk.
We dug our own grave with Cybertruck. It is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. It will take, I don't know, a year to 18 months before it is a significant positive cash flow contributor.
So if they've dug their own grave with the Cybertruck, what are the expectations? Where does Tesla go from here in terms of the next leg up in terms of growth?
Really, I'm shocked that he would say something like this.
Because it's true, and he wants to let people know that it's going to be an arduous task. That's why you're shocked he said that?
In another part of the earnings call as well, Cybertruck could be the leading source of cash flow for Tesla in the future. But of course, when you ramp a new product, it's going to burn money at first. Of course, when you have a new innovative product that nobody's created before, that you have to create the systems for, the new parts for, whatever, of course it's going to be expensive at first. But a way to phrase this much better would be, look, we are the only pure play EV in North America that is actually profitable on the cars we sell. We're going to reinvest that profit into making what could be the greatest vehicle ever manufactured, the Cybertruck. And in 18 to 24 months, we think that is going to drive the greatest cash flow we've ever seen at Tesla, greater than anything we've ever seen before. That's the leadership we need, because what does that do? It motivates shareholders to support Tesla. Tesla doesn't have as much cash as people think. They're like, oh, they have $26 billion of cash. Yeah, well, they got a pile of $23.5 billion of bills on their desk. They just had to borrow $2 billion more just to stay afloat. They don't have as much cash as people think. So the cash flow matters. And we need that vision that what we're reinvesting for is actually going to be worth it in the future. Otherwise, if I'm a Tesla employee working on the Cybertruck, I listen to that earnings call, I'm like, screw this. Why would I work for this company? Why would I work and spend my efforts on this car if even our leaders like, oh, we're digging our own grave? It is a stupid thing to say. This was a disgusting earnings call. Elon should be banned from the earnings call. Quite frankly, he should just be an outside consultant, because all he's doing now is he's blocking people on Twitter who are criticizing him, and it's disgusting.
Did y'all hear that? I think there's a ambulance approaching. Hey, Elon, You're doing it wrong.
Joining us this morning at Post 9, Dan Ives, Wedbush securities analyst, does cut his target to 310. He was at 350, but keeps the outperform rating. Dan, it's great to have you. Thanks for coming in. What about it made you say that?
I mean, if you looked up disaster in the dictionary, there'd be a video of last night's conference call. And I think the problem is that the street wanted to get details. Have the price cuts ended? Where does the gross margin outlook look? What does demand ultimately look into 2024? And instead, it was really Musk putting on his macroeconomist sort of hat. And that's not what the street wanted. I think it was lack of details. And ultimately, it was a somber note for, especially when it looks at Cybertruck and you look at the margin outlook. And I think the long-term thesis is still there. But with no rose-colored glasses, I mean, this was definitely what I'd call a disaster.
Would you expect anything different from a guy who runs a company whose goods are 90% financed? Right? I mean, that's the automobile.
Yeah. Now, look, there's no doubt that that's something that's helped him and now hurts him. But Carl, I think the big issue is really around the price cuts, because as you've seen the price cuts, there was a view that it would start to end by this point. And ultimately, by having the door open and also by losing your CFO, that was, I think, a huge part of the credibility. Investors came off that call last night. I can tell you, institutionally speaking, just a lot more questions, no answers. And I think that's really the frustration, and that's why you're seeing the stock under almost extra pressure because of that head-scratcher conference call last night.
Dan, you're one of the biggest bulls on the street. You come here all the time and have talked up Tesla for years, correctly so in many ways. By the way, I'm glad you're here on a bad day, too. But what did you get wrong here?
I think what we got wrong in the short term was the price cuts were going to end. And you knew the poker move of the price cuts this year has paid off massively. And I think that's really showed from a demand perspective. But that really 95% of the price cuts, I believe, are done. I thought Musk would have put the line in the sand, maybe a few more price cuts, then we're over. Instead, by leaving the door open, I think the communication is maybe what we underestimate even from Musk. By not putting a line in the sand, that's the frustration here, because now it's a Pandora's box and you can't put the genie back in the bottle.
I don't know how many times I gotta say this, but the price cuts will be in conjunction with demand. Right now, the macroeconomic pressures are keeping people from buying the vehicle. How do you alleviate that? Well, you lower the prices so that the people can afford the vehicle. If the demand is still lackluster, the prices will continue to drop. It's just that simple. And all of this hinges on how many vehicles Tesla can provide to the customer. These price cuts that happened in Q3 will aid them in Q4 in getting to 500,000 pure battery electric vehicles produced. There is no line in the sand. We will do whatever is necessary to get our vehicles in the hands of consumers, because that is what's going to generate future revenue. But hey, Elon, you're doing it wrong.
You know, a lot of people were commenting on the conference call that Elon sounded really down and out. He blamed everything under the sun, higher interest rates, a bad macro environment, geopolitical. But this is still your second largest position.
Yeah, look, the conference call was lousy. The earnings were lousy because they missed on the most important metric, which is auto gross margin.
Somebody's got to rein in these money managers.
And the quality of the earnings were light because it was all based on reg credits and lower tax rate. But when you think about the stock, it's trading now at 52 times. It's growing its volumes and earnings at 35% between now and 2027. I'm a growth manager. I can't find stocks that trade at 52 times that are growing at 30 to 35%. So we still like it.
In terms of volumes, you had noted on Twitter, Gary, that past price cuts didn't yield an increase in volume, and there's concern now that Tesla will continue cutting price in order to compensate for higher rates, which would hit the consumer in the form of the auto loan, auto financing. So, you know, to what end do they cut price at this point if you say that the incremental volume is just not materializing?
Yeah, there's been no demand elasticity, despite what Elon says. You know, if you look at where the estimates for 2023 were at the beginning of the year, and then you look at where they are today, they're exactly the same. If you go out to 2024, they're actually lower. So you're not getting any volume growth for these price cuts. So we've been advocating stop cutting price, put some money into advertising, use that as another tool in your marketing toolkit to try to get more volume. Because I don't think by cutting the price of the Model Y from 50,000 to 48,000 is going to get you any more incremental volume. And I'll go so far as to say that if you look at monthly payments of a Model Y today, if you took out a 5-year auto loan and rates have gone from 4% to, let's say, 7.5%, but the price of the Model Y has come down by 20%, the payments are actually lower today than they were a year and a half to 2 years ago. So I don't understand the logic of why they have to keep cutting the price. And look, I think at the end of the day, they're going to see that they're not getting any demand elasticity, despite what they said on the conference call last night. So we think that there might be another couple of price cuts, and we may see margins come down a little bit more. But I go back to, I got a stock trading at 52 times next year's earnings, growing at 35% a year, and I can't find stocks that trade at a PEG of 1.5 in the growth universe.
Right, but Gary, that revenue growth is decelerating, right? The delivery growth is decelerating. And I remember listening to you, I think it was on the last call in April after the Q1 earnings report. And I remember, I think you said that you sold a part of your position. You were not happy with the price cuts. That was all the way back in April. And if I look at this stock and I look at now the 3 reactions the day after it's reported, it's Q1, it's Q2, and it's Q3, it sold off basically 10% each time. So the big money out there is selling on those days. You seem to be very frustrated with his strategy. You seem to not buy the math that he's giving. And the CFO, who does all the math, right? Like, he left a couple months ago without really a statement or anything like that. So maybe there's some funny math going. And I listened to the same call that you listened to, and I give you a lot of credit. I was reading your Twitter this morning. You were being very honest about it. Are you selling, if you were selling stock after the Q1 call when the stock was $175, are you selling stock here at $220? Because it looks like the fundamentals of this company, at least as it relates to the autos, are deteriorating. And if simple math about price elasticity is not working for this company right now, why are you sticking around waiting for that growth to decelerate further if that's the case? And we haven't even had the recession yet, okay? So that's the other point I would make.
Yeah, well, we got a couple catalysts ahead. So one, the Cybertruck is going to be huge. If you go out and you talk to pickup truck owners, and you got to talk to all of them. You can't just talk to 65-year-olds that drive F-150s. You talk to 30-year-olds, 40-year-olds. We go out and we do that. What you find is people love the look of the Cybertruck. The Cybertruck will be out in about 2 weeks. It's going to be a rolling billboard, and you're going to see it, and you're going to get excited about it. And you may not buy a pickup truck, but you're going to go to the Tesla website. You say, wow, that's really neat. What is it? I can't even imagine the social media buzz that you're going to get when that Cybertruck starts rolling all across America. And there's a halo effect that will come with that. That'll ignite the entire franchise. That's one. Two, they didn't talk about this. I'm not sure why, but there will be at some point an FSD licensing deal with another OEM. It's probably going to be like a Toyota or a Honda. And that's going to get people very excited because there's going to be other FSD licensing deals. And then the third thing is that the energy business, which has always been very small, is now the highest margin business. It's 24% margins. The auto business is 16%. That thing tripled in the third quarter versus the third quarter a year ago, and people aren't putting any value whatsoever on that. So I think there's a bunch of catalysts ahead. And then the $7,500 IRA credit is going to go to off invoice January 1st. So I got a lot of catalysts, and you're right. The volumes have been decelerating. We're probably, if they hit 1.8 million for the year, that means that their volume growth for the fourth quarter is only going to be 18%. But I think they can get back to 30%.
Doubt Tesla at your own risk. There is no lifeguard on duty. If you feel the company is going to implode on itself, by all means, sell your stock. I'll be quick to gobble it up. The lower the stock goes, the more likely I am to place a long-term call out in the future, 2026 or so. And over the next few years, watch that double, triple, quadruple. In conclusion, the sky is falling. Sell your Tesla stock immediately. Elon's being a baby. Worst earnings call in recent memory. Why can't Elon placate to the investors? I don't like what he says or how he says it. But seriously, folks, cut through this white noise. Many of these Tesla bulls, they're managing money for other people. I don't have that albatross around my neck, and I don't have to answer to anyone. And I definitely didn't believe the stock was going to go up after the Q3 earnings call. To be fair, I didn't think it would drop this far either, but the world gives you lemons. There were plenty of good things in that earnings call, but there was a little doom and gloom, but it seemed unwarranted. If you don't know what the macroeconomic environment looks like, wars everywhere, high interest rates in the US, chaotic foreign exchange, these are troubling times. But you have to forgive Elon. He's lived through a bunch of financial crises with companies naturally slated to go bankrupt. Rocket company, EV startup, he's weathered all financial storms in the past 20 years. That's all I have for you today. Be easy. Peace.